Okay, let's go down that list, that mutual fund checklist. What are the things that you need to look at when you're considering a mutual fund? And these are things that you can find on a Morningstar report. All right, so look at the tenure of the portfolio manager. All of these things you'll find in the report. How long has the manager been there? Okay, that's really important because the manager, the lead manager, is the person who is responsible for producing the performance that the fund has had. Okay. Look at the historical profile box on the right of the management text. Is it high, average, or low? How has the fund done against the peer group over time? Okay. Look at the investment style box to the right of the profile box. If it's a value fund or a growth fund, have they consistently stuck with their style? That's very, very important because you, the investor, decide how much to put into each style, and so you want the manager to maintain their style. Okay? Look at the Morningstar category in the top right corner. Look at the track record of the fund versus the benchmarks in the middle of the page. Is it good, bad? Is it consistent? Okay? Are there one or two particularly good or bad years? This is something very important. When performance is listed for various time periods. Let's say someone gives you a 10-year, you're looking at a 10-year performance record. Let's say that it's better than the market. The question is it better than the market because you had one or two really good years, or is it better than the market because you consistently outperform the market year in and year out? Which one would you prefer? I know which one I would prefer. I would prefer the manager that consistently outperforms year in and year out. So be careful when any investment advisor starts touting their performance. You be savvy. Check out their annual performance versus the benchmarks to see if they've gotten lucky or if they got overly aggressive in 1 or 2 years, and that's why their long-term record looks good. Okay. All right. Look at the performance quartile boxes just above the performance numbers. Okay. So where are they? Where is the fund relative to its peers and the benchmark? Consistently good or bouncing all over the place? Look at the expense ratio. Okay, the expense ratio, what that expense ratio is and how it compares to their peers. Is it high, medium, or low? Look at the turnover rate. How quickly do they buy and sell securities? Listen, folks, I think anything over 50%, that means that on average a manager is holding a security for 6 months. You really don't want that. You want an investor. Okay, you want managers who are working hard, who are trying to find new ideas, who are staying on top of their securities. They buy them when they're low, they sell them when they're high, but if the turnover rate is too high, that's a lot of speculation going on. Okay? How large is the fund? Do you want a really large fund? And the answer is no, you do not. The larger a fund is, the more difficult it is for managers to invest that fund. Okay, so you want that fund to be in the middle of the pack. Okay, look at trends in the growth of the fund. If the fund is growing rapidly, a lot of new money coming in, it is challenging for managers to find investments for the fund. You want to stay away from that. Look at the standard deviation, which is in the middle of the page, and compare it to peers. This is a measure of volatility, of performance volatility, and you want to be careful of that high volatility. That's risk. The portfolio analysis in the middle right side of the page, okay, and this contains the number of stocks in the portfolio. Look at the names, okay. How many names do you want? You really want somewhere between 40 and 75 names. if there are too many names in there, it's really hard to beat the market. If there are not enough names in there, then the portfolio will be really volatile. Okay? Morningstar, the analyst will write a narrative or text in the bottom half left side of the page. It gives you a really good idea of the strategy and the background of the manager. So take a look at that. Okay? Look at the valuation measures and the long-term earnings growth to the right of the narrative. Valuation, compared to peers. How high, how low? Is the valuation consistent with the strategy, growth, or value? Okay? Do you want a fund that is trading at 60 or 70 times earnings? Maybe you do, but do you want a large piece of your retirement plan in a fund that's trading in investments, in stocks that are trading at 60 or 70 times earnings? Probably not. Okay? Look at the sector weightings in the fund. How does it compare with the benchmarks? Okay? Extreme or conservative. Let's say technology is 20% of the S&P 500, and you bought a large cap growth fund, and that large cap growth fund is 50% in technology. Is that what you are buying into? Is that what you want? Do you want a fund that's 50% technology? Probably not. Okay? Look at the portfolio allocation under the sector weightings. Make sure that they don't have too much cash. How much is too much cash? I think anything over 12% is too much cash. That means they're making a bet on the market going up or down, in this case, going down, and that is your call as the investor. Okay? Watch out for the minimum purchase. How much does it take to get into the fund? Some have 250, some have 50,000. So you have to look to see what the minimum purchase amount is. Look at the automatic investment plan. Will they automatically reinvest dividends? Can you automatically invest after the minimum purchase? Is there another amount that you can invest into the fund every month? Look out for the sales load. Look at the management fee. Check out how you can contact the firm through the toll-free number and through their internet, their website address in the middle of the page. All right, so here is a Morningstar fund, and so what you're going to need to do is you're going to need to print that report off and set it aside and look at the instructions that I just gave you, that checklist that I just gave you. You're going to want to set the report and then go over those things that we talked about. So up here, let me get my printer out for example. Here we have the portfolio manager, and he's been there since 1998. Okay. Here we have this profile. The return has been high, the risk has been high. It's a 5-star rating, above average. That's the best rating that a fund can get. Here we have the strategy, okay, undervalued asset play. So this is, let's take a look. Here's the ticker. It's a no-load fund. The net asset value, the yield, total assets of $1.1 billion. And here's the type of fund it is, the Morningstar category. Small cap value. Small cap value. Okay? And so this is what percentage of the fund is in small cap value, and they have remained in small cap value for most of, I mean, they've been consistently small cap value. Okay. Here's their performance ratings: low, high, high, relatively high, low, high, and high. So I would say 2 bad years, 2002, 1997 bad years, and 1, 2, 3, 4, 5, and 6 good years out of that period of time. So that looks pretty good. Okay. Here's their ratings for their risk, and it's average to high. Okay. And here's their alpha and their beta. Okay, and the Russell 2000 is the benchmark they use. It really should be the Russell 2000 value. Okay, Here are some of the major names in the portfolio, some of the stocks. You may not know it because of small cap value, okay? And here's a percentage of assets in their largest holdings here, okay? Their current investment style. Here's their sector weightings that we talked about. Here's their valuation, so it's trading at 22.5, and that's 1.5 times the category. So for a value fund, that is really high. Their price to book, 1.5 times, which is a little bit low. Their price to sales is low. So they really, they focus more on price to book and price to sales than they do price to earnings, okay? Here's their growth measure. Long-term earnings growth, 12.5%. That's the stocks in their portfolio, which is a little bit higher than average, and that's a good thing, okay? Their profitability, return on equity, return on assets, net margin, a little bit worse than average. Here's their composition of the portfolio, and they've got 6.7% in cash, 93% in bonds. I'm sorry, stocks, excuse me. All right, here's their sales fee, no load, okay? Here's their management fee, 1%. Here's their minimum purchase, $2,000. Their automatic investment after the $2,000 minimum, $500, okay? Their expense projections, 1%, or their actual fees, 1%. So the 1% covers all their costs. Here's the narrative. Here's the description of what the fund is up to, what their strategy is, and the things that, that they've been up to. And then here's how you contact the firm, their address, their web address. When the firm was created, 11/19/1996, and who the company is that owns it, Royce and Associates. All right, so here's a one-pager, and these, I've already gone over the things that you should look at, and so with this in mind, you should be good to go, ready to start looking at individual funds. All right, I hope that helps. Peace out. Shalom.